Hello everybody, it's Andrew Pancioli here from the Market Timing Report. It's the 23rd of July 2020 and I want to give you an update on a few markets, especially as I believe that we had very strong cycle sets for this week and especially the gold market. So let's take a look and see what's going on. This month we have key dates for the 20th and 23rd of July as shown on the cover of the current edition of the Market Timing Report. When we look at the S&P page, we note that there's a strong weekly cycle for the week ending the 24th of July on the S&P 500. And within that weekly cycle, we had key dates of basically the 21st to the 23rd, which is today. Then looking at the gold page, we see that we have a very strong weekly cycle for the week ending 24th July, which is this week. This suggests to me that we're going to get some sort of halting or trend reversal. And I'll talk to you exactly about the trading side of this. And within this weekly window, we also have a daily cluster of dates between the 20th to 23rd of July. This, by the way, is the predictive weekly chart on gold. And the key point is that we have one of the biggest spikes in our histograms for this week. And when we look back, we can see when we got a similar spike, we were just one bar, so 1 week off a significant high. There we were 1 week off a significant low, and again a significant low there within a few days. So you can see how these work with their strong spikes. Here we got a cluster of medium level ones which brought this low in here. So the point is we're focusing on this area here, suggesting that we are going to get some sort of reversal. So looking at the actual market chart and the daily cycles, there was the 20th there. We got this breakout from this range where it was just coiling sideways slightly down and then it's really popped up, and this is where we're at right now. We've been a little higher and we've just come off the highs for the time being. So this is kind of the daily window. Remember, we're in a weekly cycle, so it's not necessarily going to play out within this window. Ideally, it would play out here. But what I want to really draw your attention to is this. This is a weekly chart, and we are looking back here at the highs in September 2011. And we are, if you look, those were sort of weekly spikes. We didn't get closes up there. We actually traded up there, but all the closes were there, and we are touching that level right now. So arguably we are at a double top. This is very significant. This suggests that we might go higher. We might just take these highs out. This is a volatile market, but this is an important week to be aware of because double tops will often see a pullback. We might carry on a lot higher. Also though, and this video is going out to everybody, several of you have done the Market Timing Report trading course. I refer you to module 17, part 17, 1 minute 15 in, which is our special proprietary technique for looking for prices where final highs could potentially come in. And your key date there is the 17th of August 2018. Go and do your homework, start on that, and look at module 17, 1 minute 15 in. Use that technique and you will see that there is another good reason there why we might be about to see a final high coming in gold, at least for the time being. So that suggests that we might see a reversal. Remember, the turning points that we have are profit finding oracle dates. 90% of the time they're a reversal, 10% of the time they can be an acceleration. So bear that in mind. Now, what does this mean if you are trading? It basically means if you are long gold, you must start protecting your positions carefully because they could carry on up, and I'll show you a reason for why they might go up shortly in a moment. But I think there could be a pullback. So depending on what time frame you're playing, if you're an investor, you might be just holding up for a very long term, in which case we might well head up higher. But right now, I believe this immediate trend is at threat, if only for a pullback. So just bearing in mind then we have reached this double top with these closes here. We've kissed that today, and that is a very significant point. And also we are approaching a potential final high using our final high forecasting technique from the 17th of August 2018. Okay, that's that. Now I'm going to come back to gold and show you some other information in a minute. But what I do want to show you is silver. So first of all, note we're making a double top with the 2011 high in the macro picture of silver. If we go to the macro picture, sorry, I meant in gold there. Now let's go to the macro picture of silver. Look, it's nowhere near its all-time high here. It's barely moved out. But what it has done is, if you take this as the last significant swing, we have just hit the 50% and we are reacting off that. So when you put these two precious metal markets together, the key point that's going to come out of this is that we are hitting resistance levels. So we can expect at least a pullback, and we have a big weekly time cycle as well. So that is really the point I want to make. So that's our profit finding oracle cycles, suggesting that we want to be protecting our position very closely. Now here's the challenge. It's an imperfect world, and what we need to do is take all the other information into account as well. So I've just gone into our newly released platform, and I'm looking at the seasonality of gold. This is the annual seasonality in blue. This is our proprietary seasonality. And what we do see is that we really start getting into the most bullish phase of the year for gold as we enter August. So that would be the case for a continuation of a rally. However, the very back end of July does see a bit of a pullback. So it might be a small pullback, but equally that we've had such a big rally, and we are at this double top from 2011. That's a 9-year cycle. So that could well override and see us pull back even further. And that's what I'm saying. That's really why I'm making this video, to talk about precious metals. And the point for users of the report is that protect your positions, because we could go higher, but equally there could be a sharp pullback. And when you take silver into account as well, that would sort of enhance the case for a potential pullback because it's reached that 50% target. So nothing is clear cut. I just want to get these facts over to you. Now, I also want to introduce you to, well, actually, some of you are already familiar with this. This is the commitment of traders data, part of our platform and our own index here. And this has started heading back down towards the sell zone for gold. And what we're seeing is the commercials of smart money have increased their shorts. And we've also noticed the trend followers have reduced their longs there. So all these things are giving us warning signs that we might well be running out of steam. So just to recap then, just be very aware that we are potentially reaching we are at a double top, and we are reaching the lower points of these weekly closes here, which is exactly where we've touched today and yesterday. So I think in the short to medium term, the upward pressure is somewhat limited, but the seasonality does kick in from next week onwards. So the only constructive thing we can do is protect any long positions. Let's now take a look at the dollar index, and here in our seasonal setups from the July report, we noted that there's a 70% probability of the dollar index trading lower on the 20th of July than it was trading on the 9th of July. So that was the 20th there. We had a PFO date for yesterday, the 22nd, and by the way, there you can see that July is one of the fourth most bearish month of the year for the dollar index. So let's take a look and see what's happening. The first point is there's the 9th there, and you can see the market did sell off very nicely there through to the 20th and beyond, in fact. So that part of the seasonality worked pretty well. So when we look at the chart, that was the 22nd, which was the daily profit finding oracle date we've given for here. But look what we've done today. We've pretty much made, if we a double low here, a double bottom. So the opposite to gold, which is making a double top, we are looking here at a double bottom coming in right now, and we're kind of 1 day past the daily date. So that suggests we might see a reversal. I think for sure we'll see a bounce. So if we see a bounce in the dollar index, that's also going to impact the precious metal prices as well. So you can see how these are all correlated. So again, these timing cycles seem to be working reasonably well, but it is somewhat confusing in terms of how exactly to use them. So it's the same situation. If you are short dollar index, you need to protect that position here because you're at risk from a bounce. Do not enter the opposite until you've got a proven way. Well, first, that you can prove that the market's doing that, and secondly, you can manage the risk. So that's the important point there. Now, let's move on to our summary of the daily profit finding oracle timing dates. This is just the daily date summary. And the reason I was quite interested in this week was because we got this big clustering here. And it really started over this last, since about the 15th, really. But our good friend Ross M, you wrote in and you had a question saying, how do we handle dates that are kind of next to each other? Are they all reversals or not? So that's a good question when we're trading this. realistically, we've got to look at everything in the context of the chart pattern. So as you can see, as I've explained earlier in this video, we are approaching this double top in gold. It might play out over the next couple of days. And equally, silver, we're at the 50% level, and also the dollar index, we're at a double bottom. So the chart pattern is now kind of almost overruling these dates. I mean, we're within a day or two of each of these. Well, actually, we are. I mean, we're pretty much spot on, really. So this is the 23rd here, the day of making the video, and so these are potential reversal areas. So if you're not sure what the trend is going to do, and it's a very good question that Ross has asked, is can we expect flip-flops here? And you were asking about two next to each other like we get there and there, but here we've got four together and here we've got three together. The best thing to do is to wait till the last one in the sequence. So you'd look at that one there, or that one there, that one there, and then see how the market's transpiring. But put it in the context also of the chart and also the geometry that you're using. So if you've done the market timing report trading course, then use that along with the pitchforks or the action reaction lines or the Fibonacci levels, and then you'll get a good idea of what's going to work. It is an inexact science. We don't have the holy grail, but we do have enough there to give you an edge. Now, some other news. We've been having a lot of fun with my new friend Trevor Blake. Trevor and myself have just completed a series of 3 webinars where we've been discussing cycles not just in markets but geopolitics, life events, and the great transformational age of rebalance. Trevor is a serial entrepreneur. He is a real gentleman, and he's an incredibly successful man. He, amongst very many things he has created a course called Transformation. And what we found is that our work complements each other's very well. So, first of all, welcome to all of you who have come over to the market timing report and the courses from Trevor's side. And also, I know several of you that have been following my work for years have discovered Trevor through these not just the 3 webinar series, we've done several other joint calls. So you've got to go and visit Trevor's work, trevorgblake.com. And what I want to particularly recommend is his book, 3 Simple Steps, because part of success in trading and fund management is mastering the mindset. And there is nobody that's got this done better than Trevor. And he'll hate me for calling him a self-help guru. He is not a self-help guru. He's a fellow student on the journey of life, really. And he wrote these books after he made a substantial amount of money building companies and selling them. And he's doing that all over again right now. So I'm very excited to have Trevor in my life, and I want him to be in your worlds. What we're going to do is I'm going to be inviting Trevor along, and we'll be doing a session together. So you, those of you that aren't yet familiar with Trevor from the Market Timing Report, then you'll get to know him and you'll see what amazing things he has to offer. So I'm looking forward to that. I also want to welcome along friends who've come through, our other new friend, Courtney Logan. So I hope you're enjoying everything. Now I want to tell you what we've been up to, which is creating the Master Traders course together with this professional traders platform. And basically, this is for people who really want to raise the game, and it is basically information on all these 40 instruments here, including currencies, the precious metals, some grains, and various commodities. And it focuses on the commitment of traders' data and seasonality, as well as adding some extra time cycles that you won't get anywhere else. So let's just go into here and take a look. Here it is. What we've done is we've created a full course of seasonality, and we've put a lot of seasonality data in, and we've created a slightly different seasonal system, which is more accurate. But you'll get all these different modules. First of all, there's 3 modules on trading with seasonality. And basically, you'll then be able to look at the different instruments, and we can go through, and you'll be able to create your own diary of the turning points of a year, when to expect different moves in different commodities and so on. So if we were just to click here on the FX section, you'll see that we've got the Australian dollar, the British pound, the Canadian dollar, the euro, the Japanese yen, etc. So there's a lot of information there, and the idea is that we're going to be able to find you great opportunities across a series of trades throughout the year. Then we have a 19 module course on the commitments of traders data. So, and this is really going to show you how our platform works that we've created. And it's not just a dump of the CFTC data that US government provides. In fact, I'll share a little bit more about it in a minute. But it's basically a deep dive into it and breaking it down so we can analyze which markets are about to move, which markets are about to reverse, and where we're seeing trend continuation signals as well. So there's a lot to this, and we've got our own COT index in here that really helps showing when markets are overbought and oversold. And when we combine these with seasonality, we get a good idea of what's going on. And also we've added some 6 additional sets of weekly time cycles on FX. So those are our profit-finding oracle cycles, so you can't get anywhere else. So this here becomes a very, very powerful course. And this then also works alongside our professional traders platform. And what this is a download of the CFTC data that comes out every Friday. All the professionals have to report, so all the trading data has to be reported, and we get a very good idea of what everybody's doing. And where we get our warnings, where we get a bunch of numbers all aligned, these are markets that are at potential reversal points. And we also see we're also highlighted to extreme moves, which suggest things worth looking at. Now, if we put these together with the geometry and the techniques we know from the Market Timing Report trading course, we get some really great setups. And also within these, we've got the seasonality profiles. So, for example, if I hit this one, we'll see the New Zealand dollar. You can see how it makes very clear highs in April. We've got our proprietary seasonality, which is different. And the idea is that we only want to trade the bits where these two lines match. We don't want to, where they're against each other. We want to ignore those. This gets the odds on our side. A lot of people use seasonality, but we've fine-tuned it here. So you've got seasonality profiles there. We've got extreme moves. See, the commercials are really the smart money. They're the people that drive the markets. And they're generally the producers or the hedgers, and they really control these markets. They usually control more than 60% of a market. And the non-commercials are people like the hedge funds who are trend followers. Now, the trend followers are usually wrong at extremes because they're positioned the wrong way. And when we can see this happening, we get a good idea of what's going on. So that's that part of the platform. We also have our extremes, and this shows where the net positions are. So this is basically trend continuation signals, and it also shows us areas to look at where we've got absolute extremes. So we've got an all-time low in commercial shorting going on here. Well, what did we see? We just saw a double bottom coming in on the dollar index. So this is just a sneak preview. This is now available. We're running a special. We've just launched it today, and that's running with a deep discount. I'm going to put the link in the email and under this video. So I hope that helps. It's given you some good insights into these weekly cycles, this important weekly cycle we've got on gold and the precious metals as well as other markets. The key point really is that protect your positions. None of these have proven to be reversing yet, not even the stock market. So keep your positions closely protected because we could be about to see a reversal. Thank you again.